Hello and welcome. Today is the 28th of October 2023. Another live broadcast from Izmir, Turkey. It's afternoon hours right now. It's 1:53 p.m. time, Turkey. I know it's probably morning in the USA, but I know most of my subscribers are from Turkey, so I'm sharing this information in English as well. There are two objectives of my channel. One is teach Americans or British or worldwide foreigners, let's say, which are non-Turkish, ideas about investment in inflationary environment and different ideas, not just one object like gold, silver, stock exchange, but overall looking, including real estate, because that's how I invest. I don't stay in one single investment. Depending on current situation, I can increase my holdings of certain investments. Like right now, as you know, there is a lot of problem going in the Middle East. So, plus in my own country, the CDS, the risk value of Turkey is very high. About it was up to 800. 800 means it has to pay on top of the USA, let's say, another 8% interest so that somebody can lend money. Now it's about 4%, down to 3.5%, 4%, this risk point, because they pay that amount to the insurance in case the country fails to pay. Although until today, it has never failed, but that does not mean that it may never fail the payments. Like you can see the Chinese green country garden and green big firms, even bigger than maybe a country's economy, they are failing their payments in US dollars. So it's a possibility. So if US government is getting a loan at 5.10% for 2 years, 5 years, 10 years, Turkey must pay at least 13, 14 points, because if they just pay 4 points above, that's going to go to insurance. So why should the guy take the risk? So you must give additional 2-3% on top of the insurance. So that's a very high rate of loan per US dollar, euro bonds. But it was available in the 2000, when again there was a problem and Turkey was using IMF money 23 years ago. And I had some government bonds, and I had my friends to buy, which makes payments every 6 months, about 5.5% every 6 months, so totaling about 12% annual at that time. So I had some foreigner friends from Australia. I was setting up feedlots in Turkey for McDonald's, and they were here for their cattle raising feedlot knowledge. So they said they never made so much guaranteed money in their life, because the risk was maybe not being paid, but that's not the case, because countries try to pay so that they can draw more coming. So even the USA, similar situation, although they print the US dollar, some people one day may avoid getting US dollars because it's melting like ice in the sun as well. It's melted 25% of its value. This is official number within the last 3 years. So if a Chinese bought so many US government bonds, $1 million, now they know that they are still $1 million, but the items they can buy with it is only $750,000, $800,000. So the money just melted away. Knowing this, why are they still buying it? Because all the world's government bonds are dirty laundry. So they are just picking whatever is the cleanest of the dirty laundry. Okay, so they're all melting. So that's why my small investors, I always check whatever is a guaranteed fee is a guaranteed way to losing money. So stay away from that. Try your chances elsewhere, because like in Turkey today, I'll give you an idea about the bank's rates. They pay you about 45% per annum. But the inflation expectation is 45% at best. So if you just make 40%, that's okay. You have to at least, it's the future inflation that counts, not the past inflation. So past inflation is much higher. I can give you just an example. I just made many calculations today. The gold I bought exactly 1 year ago in October, this time, I bought it for 11,448, 10,448 TL. Okay, let's just remember 10,500. Today, if I buy the same gold, which is 10 grams, I have to pay 19,820. Okay, so it's about 10,000 more. Like I bought it for 10, make it easy, it's 20 now. So it just doubled. So how much it gained? 100%. This is buying and buying price. And then, well, you can say, okay, that's the price you buy. What if you sell it? You're going to lose some money. Fine, of course. But we have to make this calculation because I'm not selling it today. But another issue I mentioned, because one person criticized me today, you didn't really make much. Huh? I said, I make a lot more money than what you think, because the interest rate on credit cards was so low in Turkey. About during an inflation of 100%, the rate was about 21%. So I said, let's get use of this and never pay our credit cards. Just pay the minimum, keep running it on gold, buying gold. So I just checked for the same day, because I bought that gold, but I didn't pay a penny. Okay, I just used my credit. So even the minimum amounts I paid from credit as well. Just use the same credit, turning it over and over and over. Okay, so that cost me about at that low level, because Turkish government at that time chose something, let's say, behind the religious idea of Nas. So they said interest rate is not acceptable per religion. But they had other things in mind. I'm sure probably they are not that ignorant. So what happened? Inflation exploded, from 20% to 100, 130%, which is good for government, not good for people. Because when inflation explodes, the people lose money. The government, or this is very important if you're a small investor, the people who get loans, use loans, are the biggest winners during inflation. So similarly, like if you get a mortgage in the USA now, and if you buy the house cheap, okay, like 15% cheaper, but mortgage fees are high. Wow, that's no problem. Just get it, and just bargain and get. This is the best time to get it. Reason being, in US, you can always ask for the renewal of the mortgage rate once the rates ever come down. Let's say in 3 years, 4 years, rates come down from 8 to 5% again. Just you can renew your mortgage. But at that time, when mortgage rates start coming down, house prices will start going up, because a lot of people now are able to buy the house because they can pay the interest. So suddenly, every 1% of increase in the mortgage rate or decrease in the mortgage rate is equivalent of 10% reduction in the price of the house. So if it's $480,000, it will go down $48,000. So because why it will go down? Because many people, just opposite, it will go up, because many people will want to buy the house because they can now. Banks are giving them credit at a cheaper rate. So they all come to buy your house, and the house is no longer for sale at the old price. So this inflation thing is very important, because US people are not familiar with high inflation until last 2 years. And you think that inflation is always a lose-lose situation. It's not. It's a big win-win-win situation if you know what you are doing, okay? And if you own something and if you invest in loans and buy products like gold, houses, silver, whatever, anything physical, you make extremely good money instead of losing money. So, but if you just get your salary and buy the things at home for consumption, you are a big loser, you know. But if you had some savings, don't bother. You will only lose your daily home life expenditures. But on the other hand, you'll make huge amounts of money. Reason you can ask, what if the inflation is 10% and you are making 10%? That's not the situation, because inflation is just a rough number in a basket. It's not equal for everyone. When I say inflation is 4.8 for the United States, that's bull, okay? Why is it bull? Because 33% includes your housing, your rental fee. So you may not be renting your house, you may be owning your house, so you don't care about it. You may have a college student, you don't have a student, you don't have children, you don't care, you are retired, okay? So outside inflation can be 9%, like it was a year ago, the official one. Shadow stat says it's double it, like 18%. Your inflation was only maybe 5%, but also your investments was in the other side, where the prices are going up geometrically and your loans are going down geometrically by time. So it's important how you are invested, and best return in the world during inflation is not gold, is not houses, it's loans, okay? The cheap loans, fixed loans that don't increase if they are tied. Like if you had purchased a house before this 8% thing at 200-300%, you will be making a lot of money because of the loss in the US dollar buying power. Your salary is increasing, but your loan is fixed. Your rents are increasing. The rents you are retrieving from the people you rented your house to, they are increasing, but your payments of mortgage are fixed. So that's why in Turkey, instead of 30-year, 50-year mortgages, we just get 10-year mortgages. On the fourth year, the whole house is all yours, all paid for, because of extremely high inflation. So I teach people, okay, if there is a good interest rate, just like the corporations, big banks, and other people, be smart and use the loan, okay? Don't be afraid of using the loan. Not the loan interest rates in the USA. I know they are extremely high for credit cards at the moment. So you are told to close it as early as possible. But if you had a loan like for 36 months, not spent on a car or something, just regular loan, but you made some investments with it, then you would have made good money, a lot of money. It's continuing. It's continuing at a pace of 5%, I tell you, minimum. So that's the way to make more money on top of what you bought. Now, I want to review what happened yesterday. The Russian and Ukrainian, Israeli forces entered with tanks the Gaza region. They bombarded heavily. And this was the time which has been expected. When will it start? It's been about 20 days. The troops are waiting, so they must go in sometimes, So about 300,000 soldiers flew to Israel, and they left their jobs and everything and just came and joined the military. So if they delay it may delay like the Russian convoy in Kiev, 15 kilometers and waiting, then nothing is happening, So this is frustrating. So Israel had to make a quick decision. That's what I knew they should, okay? Not that they should, but if they made these preparations, they should. Otherwise, I'm totally against, in all countries, aggressive moves by anyone, okay? So whoever is under siege, under aggression, doesn't matter which country, I'm against them. So it's not a choice of a country name, okay? It's just a discipline I have. So anyway, but we cannot prevent these things from happening. So we are positioned. Everybody knew that this was going to increase if more countries get involved case, like Iran and others, and Syria and Lebanon, and on top of Hamas, other groups in the northern, let's say, border of the Gaza and Israel. So the war may expand, and we still don't know. But last night it started, the land move slightly started with the heavy bombardment of the underground facilities as well. So this triggered suddenly at nighttime on Friday night the gold. And the gold price, I will just show you now, looked like this. Okay. And you can see the sudden spike here. Although the spike here looks drastic, it's only, as you can see, 1.1%. Okay, it's $21 on top of, so it reached $2,006. It sounds large because it's above $2,000, but this is just a minimum move. This is nothing drastic due to war. It's if it was real reasons behind the gold, you would see movements of 15-20%, not 1%. Similarly, gold's brother, silver, also did the same move. But you can see gold and silver, although they look like the same graph, they are moving in same direction at different speed. When going up, like gold went up 1.1, silver went up 1.2. Not big difference. But the difference in their speeds are causing the difference between buying correlation between them. So gold-silver ratio is now 86.78, which means 87 ounces of silver can buy 1 ounce of gold. So this was the lower this goes, the silver is going up. The higher this goes, the silver is going down, okay? So if it's 120, then gold is very high. If it's like 60, silver is very high. So this is around 80, 85. To me, it's the normal for the time being. You can see I'll show you the graph for it. Gold-silver ratio. As you see, this is 1 year ratio. It's been around 80, 78, 86. But if I show you 5 year, you can see that ratio went down to 65 silver. This is when silver was dear in February 21. Then it went up to 125 silver. You see the big difference twice. Can buy only 1 ounce of gold. Here, 64. So this has been very steady for the past time. But if we see a spike this way or spike this way, the probability of spike high due to the price of silver being high is more likely. But the opposite case, if the world goes into recession, silver is heavily used in industry, unlike gold. So if industries really come to a standstill, stop, which I don't think, at most they reduce in biggest recessions about 20%, 30% at most for 1 and 1.5 years. Then they come back. So in the long run, you will see silver making huge gains. I'll show you because I'm a investor, 45 years investor for gold and 25 years investor for silver. So if I press here for silver, all the history, you will see a huge increase to $50 in very old time, 1979. This is silver price. Now it's 23, okay? So imagine the inflation here. But this was a Hunt Brothers movement, so it was artificial. But this wasn't artificial here. This was in July, October 2011. Already 12, 13 years passed from here. And as you see, it went up from these amounts, much less than $23, all the way up to $49. Okay, it doubled. So if something, and this is inflation adjusted again, so if for this one to repeat again, this is at least maybe 60% could be expected. But timing, who knows? I mean, look at these gaps. We don't know. But direction, we are sure. Why are we sure gold and silver are going to increase in value? Because money is melting. US dollar is melting. It's been printed a lot. Loans are given out, and they keep increasing. Pay the loan with another loan, pay the interest with new loans. So there is no future, okay, for the US dollar in the sense that it's going to be valuable at all. It's just going to get less and less and less valuable continuously, okay, because that's the fate. Even Fed is not offering you that it's going to get valuable. They are saying every year we intend to make it lose 2% per year. And in 10 years' time, it's another 20%. Even if Fed succeeds, that means gold will go up another 20%. Gold has to. Not just gold, not just silver, all commodities, anything physical, your house, okay, anything, food, but you cannot keep food and house, for a long time. Okay, another number from last night, I like to show you. This is similar thing, but for the intention of this video, there were another price. Instead of $2,006, there was also $2,016. So what's the difference? This is future gold futures, which means December 23, 2 months later price. So you can buy the gold to be paid in two more months later. This was $216 last night, above $10 above regular gold price. But I want to show you this section here. During the day, the gold moved between 1986 to 2019, but during the 52-week range, one year, it was 1618, and it moved up to 2085. So it's still at 2016. Some people ask in Turkey, they say, gold didn't go up. It's just the US dollar rate went up in Turkey. So friends, you can see I bought gold at 1 year ago, 52 weeks ago, when it was $16.18 an ounce, okay? And now it's a $2,000 an ounce. So it's a huge gain of $400 on top of $1,600. So gold price also went up, not just the US dollar currency in Turkish lira, because this is an English video. Americans can only see this gain from 1618. Of course, you may have not bought all this time, but if you're making cost averaging down, and if you keep buying, you would definitely have gold at 1618 as well, which will bring your average way down. You could have started at $600, $700, whenever. Even if you have started here, you are still buying, you are a new buyer, your average is still not $2,000. Your average is maybe $1,800. So it's still good money winning, especially in the long run. As inflation keeps on raging like this, you'll make huge amounts of money. So this to be shown in a graph. Okay, it was this low 1 year ago. 1 year, let me put 1 year. It was this low, and it's this high. The way is not straight up. It goes up, down, up, 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 down, up, down, 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 up, up, up. Okay, so you can make by buying here, buying here, you can make an average about 1,800. Okay, like I told you. So in the long run, this number will go up to 3,000, 4,000. Then you still have an average of 2,000. So that means you can make 100%. So I think I explained why I am sure it's going to increase. It's not the gold that's increasing. It's the value of US dollar eroding with inflation. United States inflation, not Turkish inflation. So you can be sure if you wait long enough, your gold, your barley, your cheese, your meat, and barrel of gas will all go up similarly because dollar is going down. They are not going up. So I mentioned on the cover also from the commodities. You can see from this page, commodities page. Okay, I'll show you on the corner here. Okay, now here as you see, I picked up on this corner commodities. Crude oil went up 195, more than gold last night, 2.34% WTI. Brent oil went up $2.50, about 3%. Last night increase in gold was only 1%. I tell you, it's not a huge run. It's just a small bit of move. Silver went up more, as you see. This is I'm checking from the futures, but you can do it the same in regular price, just because we are talking percentages here right now. So as you see, soybeans, copper, they all went up. See, all commodities. Natural gas had a specific situation in the USA. And that's why you can see, well, natural gas was down. It has a specific case, the natural gas company of the USA. So in commodities in general, when dollar value increases or loses, the strange thing is here. When we look at the value of the currencies, indices, if we check the dollar index, US dollar index, this is the dollar value worldwide comparison with euros, Swiss francs, a basket of strong, like sort of strong, Japanese yen, British pounds, 7% is biggest percentage is euros. So this is comparison of this basket against the dollar. Now, because dollar is paying so much interest, Fed is paying, it's a lot valuable at 106. Now, when US starts to decrease the rates, right now we know at the 1st of November, they are betting that there will not be any increase in the interest rates in the Fed meeting. But if we check this here, I'll go to 5 years for showing. This is the graph. As you see, dollar is valuable. Dollar was much more valuable in 22. Okay. But as you see, it was down to 89, 95. Okay. So comparatively with here, dollar is dear. Normally, when US dollar is high like this, gold shouldn't, or commodities shouldn't increase because they are giving higher winning interest. But now the situation is so bad, the US government bond interest payments are causing such an incredible bad situation for the future. Yesterday, there was one bank manager of JP Morgan selling 1 million of his shares for the first time. So it may be just for taxation reason, but the common stock exchange realized that banks are in big trouble. Even the bosses are selling their shares and leaving. So if this goes down to here, you can be sure gold will go to 2,000, 2,500 range, easily, because not gold increasing, dollar losing value, So I hope I was able to explain this to you. These are a bit theoretical things a market person can understand, but I filled up my 29 minutes for the English channel. So whenever you watch this one, we will not stay in gold forever. If gold goes from 1650 to 2000, currently environment, when there's all these wars going on, even Chinese aircraft last night was close to US bomber. You know how much? 10 feet. It could have been an accident right away. Then you have a third war, not third world war. third war starting, maybe. So things are so critical at the time. So it may be good idea to stay in the sidelines in the safe haven products, let's say, but not forever, because I do sell my gold. When do I sell my gold? When I think that it made the top, like when the silver made the top at $48. Okay, you just wait, but you saying, why at 32 it may go down to 20. At 35 it may go down to 20. At 40 I better sell, it may go down to 20. So most people are never there at 48 because they already sold it. So it's much easier to stay invested when you're losing money, because you want to at least say, I want to get my money back from this investment. But when you're profiting, now it goes up to $2,006. Let's say next week, 2030, 2060. So where are the stops? I tell you the stops for gold. This is called technical analysis, just checking the old stops, but you must apply inflation to those graphs, because we are not talking 1 month, 2 months. We are talking 10 years, 15 years. So $10 then and $10 now has no relationship. It lost about 30% of its value. So if you don't apply it to graph, the graphs will be lying to you. Okay. So based on these calculations, I see if gold exceeds 2060 to 80, because this is how the computer programs are programmed, based on the old graph numbers, not adding the inflation. So you will see if gold breaks 2080 an ounce, then the big move will start. Okay. Up until then, 2050, 2080, it may still keep going on like this. You must be very patient, but you must be sure that it's going to go up, because inflation, not the gold. Okay. I wish you all a nice day. Stay confident. Make a basket of investments. It can be a house by loan. It can be gold, silver, mutual funds. Don't go into stocks by yourself, because you'll lose money. The first 7 stocks in the Nasdaq are the profit. The rest of whole Nasdaq is loss. So, and buying a company that's already at such a high price is not very reasonable, because how far it can go. So leave it to professionals. At least they can add or subtract, or sometimes some new companies. You can go all new companies. So we know a monkey chooses better stocks than even a fund manager. So let's leave it to fund managers at least. Okay. See you all. Good luck.